American University in Bulgaria.
So we'll be talking today about open and closed innovation, and in the first hour, and the innovator's dilemma. Have you ever heard of these words or topics before? No? So kind of not? Okay. So we'll start with open innovation. When we're talking about open innovation, obviously there's something that would be called closed innovation. Okay? Because you otherwise it's innovation. You don't have to differentiate between the two. So let's first talk about closed innovation to understand that. Closed innovation paradigm. So if we're looking at technology, products, they go from the research area into development. And if this is the borderline of a company, okay, then we start to have some projects that, one goes on here, these kind of end. A couple others show up, and then it starts to move on to become a product. Okay, so ideas have come up, but it's all inside of the company. And then it keeps on going and actually goes to the market. So that's kind of the model of closed innovation. Everything, all of the projects happen within the company. And that's the way many companies worked and functioned for 2-3 centuries, if we're talking about products coming out like that. Everything was done internally. All of the research, all of the development. There are some assumptions if you follow that model, assumptions of what I have to do. I mean, there's also some reasoning behind having closed and open innovation. So in closed innovation, I'm trying to protect my IP. I'm trying to hold all of the knowledge internally. Good reasons for that. Most modern companies have a combination of closed innovation, the crown jewels, and open innovation. And we'll talk about that a little bit, because there's some strategic reasons why you would want to have open innovation as well. And we'll talk about what that really is. Assumptions of closed innovation is we should hire the best and brightest people so that the smartest people in the industry work for us. That has some implications. If you're trying to hire the brightest people, they're very, very highly paid people, and you don't want them to go away. So you need retention strategies to keep those people, especially because they will know about your intellectual property. You don't want that to dissipate outside of the company. In order to bring new products and services to the market, we must discover and develop them ourselves. So the competition here, the idea here is to do it yourself faster and keep that knowledge internally, and then no one can follow you. Okay? So it's kind of putting a fence around everything. If we discover it ourselves, we get to the market first. The company that gets an innovation to the market first will usually win. Sounds all logical, right? So if we lead the industry in making R&D investments, we will discover the best and most ideas will come to lead the market as well. So from our earnings, we keep investing in R&D, and because of that investment, we get more ideas that we can create products with. We should control our intellectual property so that our competitors don't profit from our ideas. Okay? So even before we had patent offices, you could work with this model because you kept all of your knowledge within the companies. Okay. Advantages of closed innovation. the logic of closed innovation creates a virtuous circle. So by keeping the knowledge internally, I can create great products. I can earn a lot because no one can compete with me. And I can take those earnings and reinvest them in R&D, which will give us the opportunity to create more new products, et cetera, et cetera. So that's what the virtuous circle is talking about there. We kind of create an ecosystem within the company that gives us a lead over other companies. Because we're investing a lot in internal R&D, we can get to breakthrough discoveries. I have a couple of examples later. Those discoveries enable those companies to bring new products and services to market. We get more sales, we get higher margins, we can spend more on R&D, which gives us further breakthroughs. Because the IP that arises is closely guarded, others cannot exploit this. Okay? The origin, it started in the German chemical industry in the 19th and 20th century with a centralized research lab. This is where you have the big chemical companies like Bayer and pharmaceutical. They were kind of a result out of those. This was mandated. Here, we put this together, all of the chemical industry in one place. And that local ecosystem helped that to establish. Okay? This model was copied by Thomas Edison when he created Bell Labs. Okay? Closed. Okay? And there were developed many breakthroughs, founded General Electric's famed laboratory, Bell Labs. Okay? The transistor, etc., came out of that lab. They were research results that were coming out of there. Physical phenomena, etc., came there. The US government created ad hoc central research lab for nuclear fission to develop the A-bomb. Okay? Also closed. That was closed more for political reasons, but closed. The Cold War kept the level of closed innovation going. So while it wasn't necessary from a business point of view, you didn't want political adversaries to get hold of that. Okay? So the concerns today with Iran, etc., kind of are getting in that space again. Okay? You don't want those things to happen. You don't want that type of technology to dissipate. Let's look at the open innovation paradigm, and then we can kind of compare. So the same model, research development, this is the borderline of the company. And we have some research projects internally, and over here we have some projects that are external. Not started by us, not driven by us, but external. As we move forwards, some of those are advancing. Some of these are moving outside of the company. So this would be a spin out, spin off, spin out. Depends on whether it's intentional, the use spin out or spin off, whether it's intentionally or happens. So a technology, interesting, but not really the core. And we see here some projects developing that kind of move now internally, okay? So this is when we do a purchase of a technology or a merger and acquisition of a company, because our product isn't complete and there's a great new idea out here, so I pull that piece in and integrate it into the product. Okay? And so you have then product moving on internally, you know, and even more pieces coming even much later. And you have pieces that are moving out. So this area goes to a new market, not our market. And this is for our current market. Now, there's many examples. I always try to get some recent examples so people understand. We're taking a look at, product here, Apple, iPhone, product here, whether it was here or here, I don't know, but definitely from the outside, product enhancement, Siri, okay, software that was developed, voice recognition, over the internet, good responses, etc. I pull it in, I buy the company, add it into my portfolio, okay? Intel bought Infineon, okay? With that, they had access into the mobile market, which they didn't really have at that point. Infineon delivers the communication components that go into the iPhones and the iPads, etc. So where they weren't in there with the processor, they're now there with the communication pieces. Intel bought McAfee, which still needs to be figured out how that will be integrated with a product. But it's pretty clear that software security and hardware security put together give you a much more secure environment. Question is whether you had to pay $8 billion to do that. Okay, but those are things where these are things, companies that are brought in here, brought into bigger corporations. Yes, a question?
Like when Apple started buying processors for Intel, their Mac computers, they did the same but different. Because they didn't buy Intel, they just bought products from Intel.
They didn't buy Intel. Intel's too big just to swallow like that, and too diverse. We spoke about stock dispersion yesterday. It's just those type of companies you can't buy anymore, not that easily. McAfee is a relatively big company, but the stock was held in bigger chunks, so you could actually get that off of the market. Apple had in its history a number of times technology transitions, and one of those decisions of technology, they had to move from one Motorola processor to another, and it was a complete redesign of the software, and that brought them down from 45% market segment share at the time down to 2%. They just were not competitive with the PC market, okay? The current generation, or the generation before they moved to Intel on the platform side, not yet on the phone and the tablet side, but on the platform side, that was also a move that they needed to do from one processor generation. They needed more performance, and they wouldn't get that anywhere else. And there was a technology agreement on what they needed. So Intel actually created a new type of technology to make the processors and the components very, very flat, so that they could actually. I have one of these Mac Airs. I mean, this. You look at the processor part; it's just very, very small. And you need to get the heat away, et cetera. So new technologies to be able to do that. So companies partner then as well. But that's more on the open innovation side there, okay? So
I'd like to hear your thoughts about where would Huawei fit into that move. Huawei, the Chinese leader in telecommunications right now, that was banned from producing and be active on the US market. They're known for being very close Chinese military style of a company. Aren't they going just in the opposite direction to the one that you indicated?
The closed innovation.
Yeah, exactly.
Well, China is probably very hard to define what's going on. They're kind of going through the whole industrial revolution back and forth right now. So some things are happening, it's not that as market driven, it's more governmental driven also. And you're talking about, you know, high-tech products. You bring them over and demo them, and then you're very surprised when they had built them, copied them, you know. There's a company that makes magnet-driven trains in the Munich area, and they brought a demo over to China, and it was copied 100%. You know, so they didn't buy it; they copied it, copied the technology. Right? They had it like a demo. So for 2-3 kilometers, they built it, and then probably in the night, everything was measured and whatever, and copied it. So you lose business. You have to be careful with things like that. In economies where you have business ethics, that's why you have patents. That's why you have, you know, agreements. Long-term, you want long-term business. So, you know, those type of companies aren't going to bring any other products over. You know, you catch people coming in with, you know, video pens. You know, there's a company also. High-tech material that they used for all of the Olympic stadiums, the covers for the Olympic stadiums. It's in the little town that I live in. And they caught a Chinese person with a video pen. You couldn't hardly see it, but they caught them trying to catch the IP of what they're doing. So you have to be careful. I'm not saying that all Chinese are like that, so, you know, but it's, you know, we're talking about a lot of money, you know. These are millions and millions that they spend when they're doing things like that. And you need to have business ethics. You know, whatever you do, you know, if you stay ethical. Okay. So to get back to your question, I think that's why I said kind of going through the Industrial Revolution, because they're going through closed and then they're going through open. You know, the country's opening, and then on the other side things are closing. So I don't think that it's really sequential. Yeah, right now. Okay. So the assumptions in an open innovation area, not all the smart people work for us. So we need to work with smart people inside our company and outside our company. Okay? We collaborate, we work together as companies, we recognize the value that others bring. Of course, we need to protect our value as well and generate revenues with that. External R&D can create significant value. Intel spends about $6 billion in R&D, internal R&D. And with its open innovation approach, gets probably another $20 billion worth of development that's done in the ecosystem, and can reap some of that, can harvest some of that for its own usage. And many other companies do it just the same way. Okay. We'll get into some of the strategy in a second there. We don't have to originate the research to profit from it. So I can take a piece that originated from us and I can add other pieces on that didn't originate. I have a bigger component or a bigger piece of the solution and I sell it off, and I can harvest my piece because it's in there, but I also have value that I'm selling from someone else. Building a better business model is better than getting to the market first. We heard that yesterday from Kowalski, okay? Getting to the market first is disputable. If we make the best use of internal and external ideas, we win. We should profit from the others' use of our IP, so licensing our IP to others. And we should buy others' IP whenever it advances our own business model.
ISP stands for industrial process?
Intellectual property.
Intellectual property. IP, sorry. When I'm starting to get out of it, being over a year away from Intel, but we had we had so many TLAs. You know what a TLA is? 3-letter acronym, which is already a 3-letter acronym, okay? Okay, so we were using, you know, you're sitting there and you need a decode sheet when you start in the company, kind of, what was that guy talking about, you know? I hear this and I hear that, you know, and these, so many, you get a jargon going in the company, so that's starting to go away after a year, you know, and talking more external than internal, you know. Because if internal, some people would, if you said intellectual property, they say, what? Oh, you mean IP. You know, so they're so used to the acronym that it doesn't. Okay, comparison, open and closed. Examples of industries that are closed. Nuclear reactors, mainframe computers, typically very closed. I remember some of the business models on the mainframe computers were incredible. You would buy a huge mainframe, and your memory would get tight in the mainframe. And then the service engineer would come in and just put a switch there. The memory was already in it. It was just not enabled. And put a switch there, and you would pay, you know, 20,000 euros or something for that service of moving the right switch in. So very close. You couldn't do it, service it yourself. Okay. Open industry, PCs, movie industry is open. You get a lot of ideas from all over. Largely internal ideas. Here it's mostly external ideas, or many external ideas. There's low labor mobility, so people don't rotate from one company to the next. You try to keep them within the company. Okay. When this was done massively, the closed innovation, there also wasn't anywhere else to go, because, you know, it was kind of the big conglomerate companies that were doing this was more country against country, and you wouldn't move necessarily to another country. Here you have high labor mobility. In Silicon Valley, 20 years ago, if you're looking at your career, you kind of had to move every 2 years. It was kind of, okay, I'll be 2 years at Intel, 2 years at Microsoft, 2 years at Cisco, 2 years at, you know, that was kind of your career. If you didn't advance in that company quick enough, you would move. And you only move if you get an advancement. That's normal, right? And so that churned. You got a lot of people moving. And that brings ideas from one company to the other, because you can patent technology, but you can't extract it from the brain when the people leave the company. Here there's very, very little, if not no, venture capital involved. If venture capital wants what you do go to the market, so they want equity, which they're not going to get in a closed environment. Here there's a very active venture capital environment. Very few weak startups. These are probably more the spin-outs that potentially happen. A group decide on the project that was just killed internally, we want to continue it, so they take it outside. Here there are numerous startups. Universities are unimportant here. Unimportant as partners. Of course they need people that have the university degrees, okay? But not working with the universities actively on the research side and curricula side. And here universities are very important. Okay? So for an entrepreneur, which of these models is most interesting? Open innovation. That's where you get your exit, okay? You don't get an exit in a closed environment.
I think you have to explain this last sentence about
Okay, we spoke a little bit yesterday, but yeah, probably some. So, if I'm repeating to the others that were listening, sorry, but when you have a company, start a company, there's only 2 times in the life of a company that you know what it's really worth. That's when you start, when you count the chairs and the laptops and whatever you've brought in there and put them on the balance sheet. So, you know, $3,000, 2 laptops and 2 chairs or something like that, okay? So you know the value then, and then in between, until you get an exit, until you either sell the company to another company, do an IPO, an initial public offering, go to the stock market, or go broke, okay? Those are the three exits that you have. The first point and the last point, you know exactly what the company is worth. In between, it's all virtual value. Okay? And you're only going to really get an exit if you have VCs there, or go to the public market, which is basically also an open environment. Does that help? Okay. So the pros, cons, what do you think? Any other? Well, closed has, I mean, a company like Intel or Apple or Cisco, they all have closed innovation for the crown jewels, for the process technology. I'm speaking now Intel, the process technology. How do I make the transistors smaller and less power needed than my competition? Okay, those are protected because that's what we want to do. Okay, that environment, crown jewels protected. Okay, but then you have to have a strategy of, okay, well, once I've produced the processor, it has to go into a system. And there's only like 5, in the meantime, only like 5 real manufacturers of PCs anymore. Maybe it's 8, but it's, you know, less than 2 hands full. And I need to get them to be able to get technology, other technologies deployed where people feel that they have an advantage. So taking a couple of advantages, I mean, this is running on Bluetooth, okay? Intel invented Bluetooth. Put it to the market. Yes, it has components, chips that will do Bluetooth, but this is from Logitech. Okay, and you have many other vendors that create things that attach on Bluetooth. USB, Intel invented USB. Of course, a system has USB, and there are chips inside that drive the USB, but there are also other manufacturers that drive that. So it's an industry standard that was defined, and usually, as a company like Intel, that's a component company, not a systems company. You have to try to drive that type of technology and make it available outside and try to help a new ecosystem to evolve, okay? So with the USB, many different attachments are possible to the computer. And because of that, it's more enticing. The computer's more enticing, has more value, because now I can put a camera on it. It's not, well, this one's sold with a camera, a little one, but it used to be you didn't have a camera with your laptop or with your system. So you go and buy a USB camera. Okay, now now I have a webcam. And all of the other devices like this, interface to your phones, etc. So all that enhances the value of the system. And that type of ecosystem, to build that, is what we mean when we talk about open innovation. Very often we go in to the market, and I'm still saying we after a year, so forgive me. You go into a market, create it in the open innovation area as a big player, and then you retreat from that market. Anybody remember the Centrino days? Centrino was the very first processor that had Wi-Fi. Okay? At that time, when we were planning, actually 2 years in advance, we were planning to launch the Centrino, and 2 years in advance we were thinking, wait a minute, we actually had 45% market share on Wi-Fi equipment, hubs, gateways, routers, etc. 45% of the market, branded, Intel branded. And we realized, though, to bring the Centrino as a platform into the market, we would need a partner. We would need a partner to put Wi-Fi kiosks all around, all of the airports around the world and in hotels and whatever. I'm not sure if you remember or have seen, you don't see the signs very often anymore, but it used to be kind of this blue and magenta sign, which was the Centrino sign, and it said Wi-Fi hotspot. There was like 20 or 30,000 of those were put in place around the world before the launch of the Centrino. And we couldn't do that ourselves because we're not an operation that has a service group that can go and do that. So we needed a partner. The partner of choice was Cisco. Okay? So we did this together with Cisco. But Cisco at the time was also our biggest competitor in the hubs and the gateways and the... So we decided to move out of that business. Okay? Because of federal trade requirements, we could not hand over the business to Cisco. But we just retreated. We stopped producing and stopped selling product. And because they had good competitive products, they could move in and gain more of that market. And then we had a very good partner to go off and do, I mean, when I logged in here, there's like 15 different Wi-Fi access points here, reachable from just from here. So I don't know where they all are, but there's like, I mean, the world is now full of those. And because of that, you basically expect your platforms, all of your platforms, to be connected. Okay? So now the platform becomes much more of a personal device, much more, you rely much more on it. And so you're willing also to pay more for it. Okay? So those are okay.
So can we say that both the open innovation and the closed one are good because they bring value to the market and to the users, right? But can we say that sometimes also closed innovation can be good depending in terms of profit side where you look for it? Let's say if it is a business that operates with closed innovation, like you said, Intel does, the people who are inside the business are the ones who are making profit, and they're taking advantage of this. It's positive for them, but it may not be positive for other outside competitors, right? That's why it comes to negative value.
Yeah, they're both good. It's a combination. Big companies do the combination because we're not in the business of webcams. It's not our core business. If you create a business, and we spoke about that, decide which business you're not in, which business are you in, and focus. Okay, we spoke about that yesterday. And I think it was yesterday. And when you do that, you have to take decisions like, okay, this is, you know, a great, interesting environment. I could create lots of webcams, and I could create lots of devices, add-on devices for the systems. But is that what we're good at? Is that what the company's core strategy is? And if it's not there, then you can decide, well, maybe that's something that we should put out in the open innovation environment.
So to come close innovation, what do you have compared with that?
You need both in a modern corporation, bigger company. You need both, okay? Because what you're good at, what you want to do, you need to protect. Patents is one way, but you know, today, as I explained, you know, there's industry espionage and things, you know, process ideas are hard to protect. Okay, so if ideas get out, then so just to give you an idea, if you're trying to protect. But to produce a microprocessor, over 300,000 patents are used. From the process technology through to what the processor does itself, over to the components that are supporting as well. So you try to protect it, but you still also need to try to protect your core teams. So companies have then, for these key engineers that have that knowledge, they have very interesting retention programs, okay? They get paid good salaries, but they're also getting a good future return. So if they leave the company, they lose all of that future. Okay, so a lot of stock, and that basically goes up over time, and so they try to keep those people a long time. Companies like, I know Intel and the others do the same. So when you do a patent, the company pays for the patent fees. It's registered under your name because that is your, but Intel pays the patent fees, the continuous fees, and gets, though, a non-exclusive lifetime license on the technology. So you own the technology, but if you leave, Intel can still use it. Any more? Here, okay. Okay. So that was open and closed innovation. Now we'll talk a little bit about the innovator's dilemma. Okay. The impact of sustaining and disruptive technology change. Okay. And here there's from Clayton Christensen. He actually analyzed this on steel mills. Okay. And then later on, it was realized that this result of his research is actually applicable to almost any market that has innovation. Okay. So what the issue was with these steel mills, you know what a steel mill is? They produce steel, you know. They produce pot metal. That's the cheap little metal that they use for children's toys that you can, it's almost like lead, you know, breakable, bendable, real cheap metal. All the way up to, you know, space metal, whatever you need there. Highest grade of metal, okay? So these steel mills would produce, the, you know, a whole palette of different product. And then a couple of small, what they called mini mills, came in, and they started producing pot metal. Okay? And they, because of the way they approached it, they could produce it cheaper and even with a better quality than the big super mills. And so the super mills said, you know, this isn't our business anyway, you know, we've got all of these other steels. We'll let them do that. They have something to do then. You know, we won't, they're not really competition. We'll let them do that. And then these mini mills got a lot of experience by creating this type of steel, and then they went up a grade of steel. And the super mills said, oh, that's not our business. We'll let them do that. We'll focus on our others. And this kept on going on until the mini mills were producing also space steel and basically replaced the big super mills and were much more effective, were much cheaper, et cetera, et cetera. So the competition came in with a disruptive technology, low quality. Typically, disruptive sounds like it's top of the edge, but it's typically lower quality, very limited market, very focused market, and then it grows from there upwards. We'll take a look at that in a. So if we're taking a look at what you would call product performance, that doesn't necessarily mean processor speed. It just means from one generation of a product to the next generation, I've increased the quality of the product, okay? So the last 50 years of detergent soap, it always says new, better, best, you know, whatever. No clue whether that's true, but that would mean, you know, an improvement sustained from one year to the next, to the next, to the next. That's why we talk about sustaining. So here we would have progress or product performance over time due to sustaining. So an upwards curve in quality, in performance of the product over time. Okay? And if I take a look at here, this is a line that is the performance demand at the low end of the market. What that means is the market, if you're below this line, so this area here, would not buy the product because it's not fulfilling their requirements yet. Okay? So detergent that doesn't clean or something, you know, so it's not there yet. And once you cross over this point, then it starts to become, it's above what they need, and then they would buy it. Okay? So that's that point. And then you have another line, which is the performance demand at the high end of the market. What that means is basically, if I'm above this point, then I will not pay more for all of the features that I'm putting in there. It fulfills my demand, you know, and the more performance you're putting in there, don't need it. Not willing to pay more for that. Okay? It's kind of a dilemma if you're in a technology environment, because you're always, you know, you're trying to race ahead of everyone else with your technology, with your product. Okay? So this is kind of the sweet spot where I can sell my product, right? It fulfills the minimal requirements and is not yet above the others. I can sell the product here as well, but I just can't charge more for it. Can't charge more for it. And then we have what we would call disruptive technology. Disruptive technology is a technology typically lower end, very niche market, fulfills their requirements, as in the steel mills coming from the bottom up. And at some point in time, it also gets into the sweet spot. and becomes that competition. Okay? Disruptive technology, starting at the lower end. How many of you have smartphones? How many have Samsung? Okay, sitting next to each other? Okay. How many have iPhones? Okay. What other are there? Nokia. Okay. Yeah, there's HTC, yeah. Okay. You all bought those because that technology you found enticing was fit your personal needs, right? Otherwise you would have all bought the same, right? Technology is emotional. Sounds paradox, but it is. Technology is emotional. It's hype, you know. Okay, I've got the iPhone 5, you know. It's a little bit better than the 4S. But
they say it's slower.
No, it's twice as fast. It is twice as fast. Okay. Samsung probably said it's slower. But technology is emotional. And when you purchase that device, that emotion, your emotion was there. Okay? Very, very personal. When we're talking about disruptive technologies, you have to look at a product like how easy would it be to sell an iPhone or a Samsung to your mother? Easy? Easy. No? What does a mother want, typically? Three buttons, okay? On, or maybe two, on, off, and maybe two buttons, son, daughter.
Depends on how old are
okay?
How old are your mother?
Well, yes. Huh?
It's age.
True. Yeah. If they kind of were in, you know, the technology environment, but that's a product down here, you know. Very low end, you know. Elderly people, they don't want, you know, they don't need to SMS, they don't need to do this, they just need a couple of buttons, you know. It's a telephone, right? I mean, that's what it was. That's what, you know, that's what they want. And products like that will come in from the bottom, and as they increase their performance, as they add features and features and features, they will become competitive here in this area to the other products. So it's, you know, I told you the example of steel mills. You have the example of telephones. You can take this from one technology to the next, to the next, to the next. This is why Christensen's thoughts here were taken as basically the basics here for understanding how you need to react in a market. Okay, so I've got a problem here, right? I mean, in here it's okay, you know, disruptive. I'm still ahead of them, you know, whatever. But when I'm here, you know, here, all of my R&D, all of my innovation doesn't help me get €1 more from the customer. So what do I need to do? What do I need to do?
Produce it cheaper. Increase the price of your production.
It's a way to, for a while, but this goes over time, you know. That gives you maybe a little of a look.
Keep working on your product, not work on your marketing strategies, how to convince the customer that your product.
What's marketing? I have an engineer's definition of marketing. Engineer's definition of marketing.
It includes much more than just innovating the product. You can innovate like the marketing channels and how the product will reach the consumer.
Okay.
Just introduce the need for
the need.
research.
You need you need to, yeah, I think you're getting there. The wording, not quite yet. I'll tell you the engineer's definition of marketing, okay? You take a chicken, okay? High tech. Take a chicken and a hammer. And you hammer the feet flat and sell it as a duck. Okay, what did I do? I added value, right? I added value. Ducks are more expensive than chickens, right? Okay, engineer's definition, okay. Marketing. So what do I need to change here? What do I need to change in this diagram?
Push the performance demand up.
The performance demand here, up. You mean kind of like that?
So you have some room for further R&D, and you can do it faster and better than the competition.
Yeah, that gives me, some time advance there. But, here I'm going to get into that same issue again. So that's a good approach. That's marketing, This is where I create the hype, cool, flat, Apple, that type of hype. iPhone, you buy the new one, even though you don't know whether it's, really much better than the old one. Cars, the ultimate driving experience. Cool, I want one of those. Do I need it? Yeah, I need it. I really need it. I don't know how to explain it yet to my wife, but I need it. Huh? That's the demand we have to create. And this is, I was at a conference and they had statistics on how many advertisements we see today. And it's something like 8,000 advertisements today. Modern people with Facebook, with television, with everything they're encountered, just walking down the streets. 8,000 impressions a day. That's all marketing, trying to create demand for something we don't need. Well, I need that one. Okay? And you create, usually, you have the emotional attachment. That's why I said technology is emotional. You have the emotional attachment. And then you go back and try to rationalize why you want to buy it, Well, if I'm going down that curve at 180, it's safer. I don't even think that I could go down that curve at 120, so it has to be 180, So you try to rationalize the need, and then you go and buy. And then you argue on the rational side. Okay? Once you figure that out, this was an emotional purchase. Okay. Okay? Now there's one more thing that we could do. So not just demand. We were talking here about sustaining. Okay? We can go to revolutionary innovation. This is where you really need to look at what you're adding on in products. So revolutionary, what was revolutionary in the smartphone area?
Touchscreen.
Touchscreen. Being able to squint and move and what. So I was asked once in a presentation what I thought was going to be the next biggest innovation coming out. And I said, well, it's hard to say exactly, but it has to be something of that revolutionary type. I was driving down the street with my navigation system on, and I wanted to enlarge the map, and it didn't work. Usage model is going to be one of the next biggest. That's a usage model. It's immediately adaptive. Addictive and adaptive. We get used to it immediately. Everybody uses it now, and we can, you can pinch on that, you can do that, We just assume it's there. We will soon assume voice recognition is there. We will soon assume other things are there. Any of these revolutionary things is going to have to be of that category. Instead of us adapting to the technology, okay, you don't have one, but I have a keyboard. It's 180 years old. And the letters are organized. Why are the letters organized like they are?
At the beginning, they used to collide all together.
Right, exactly. So why are they still organized like that?
You used it.
Because we are adapting ourselves to the technology, and not the technology to us. So those are the changes that are going to have to happen in those things. A mouse, 40 years old. Why do we still use them? We get our arms hurt when we use them a lot. We get a tennis arm from using a mouse. Okay? Really ingenious innovations are going to have to be of that category. They adopt. Intel has a whole group of anthropologists that are trying to figure out how products need to adapt to the human. Change. It's a big change. Okay? Disruptive technologies bring to the market a different value proposition than available previously. I'll move through this quickly because we spoke about a lot of this just now. Okay? Disruptive technologies typically underperform products. They have features that new customers would like, the 3-button telephone, back to that one. They're typically simpler, smaller, more convenient to use. Should I focus on developing disruptive technologies? The conclusion from corporate side is that disruptive technologies focusing just don't make sense. If you do the math, you can see that. They're simpler, cheaper. They don't generally promise lower margins, not greater profits. They're typically first commercialized in emerging or insignificant markets. Leading firms' most profitable customers typically are going for the high end as well. Okay. If we take a look at, I'm just going to here. If you play with the numbers, small markets don't solve the growth needs of large companies. So if you have a relatively small growth from 40 to 48 million, okay, then that's 20%. But if you're already a $4 billion company, to grow from $4 to $8 billion, $4.8 billion, that's 800 million, and that's larger than most emerging markets altogether in certain areas. Okay, so a company wouldn't focus on a market like that. Okay, then you'll get some of these, you get all of these slides. Just very brief, we should be doing a break pretty soon, right? I'll break after this. Yeah, I'll break after this first part, and then. So we call this, we use small markets as beachheads. What you see is you have a first technology, a second technology, a third technology. And what you're trying to do over time as a corporation is basically try to ideally get to a straight line. So your product, one product goes away, the next product comes, etc. Okay, so you have the iPhone 3G, the iPhone 4, the iPhone 4S, the iPhone 5. You know, you basically, that's the sustained growth that you're looking at, and this is what you're trying to ideally create. A product comes in, doesn't ramp initially first, then it ramps quickly, and then it kind of eases off. By then, you should have a second technology that comes in and starts to ramp by the time this one flattens off too much, et cetera, et cetera. The problem we get into is what happens if that one doesn't happen, the third technology. What do you do then?
You look outside the company.
You look outside of the company, yeah. What we have then is basically this technology one, and we have another technology, disruptive technology. We spoke about that on first day. Keyhole, if you remember that. Google Maps, Google. They looked for a technology from the outside and brought that in. They were trying to complement their product. So you get then humps like that. For entrepreneurs, that's an exit. Because I can now sell my company to someone that needs that technology. And now I can cash in on all of the effort I've put into my company. Okay? The exit. When you start a company, think of the exit. So we'll now break.
Okay.
So now we'll move on, I guess. Okay, ready? Because we still have actually quite a lot of material to go through, so I'll hope to go through quickly on some of it. This first part with the innovator's dilemma is a very good chapter to understand how the market works. That's why I spent on that one slide a lot of time, because that's really, really important. The business plan, it's a metaphor for entrepreneurship education. When we were putting together the Intel UC Berkeley entrepreneurship program, our management was asking, well, why do you want to do a business plan competition as well? Because we had that as one of the pieces of the education system. And I said, well, if you're teaching programming in computer science, then after you've taught them computer science, you send them into a lab so that they can learn and become proficient in programming. Okay? Logical. Where do you send an entrepreneur? Okay? It's multidisciplinary. There's no kind of lab that you could send them to. So you need some type of a platform to be able to exercise, to be able to get a feel of what it's like to be an entrepreneur. So you go through basically all of the moves, all of the techniques that you would need to do when you want to go to the market, but it's in a controlled environment. It's there while you're a student. I just had the discussion, while you're a student, you're not necessarily dependent on the income. So you can experiment with a startup. Actually, a number of startups from our educational program, they were student programs, have become companies from which the students are living off of now. So it's good.
Do you have any indication about regarding the success rate, if you measure success?
Well, the intention is not necessarily out of the student environment to generate a company that they can live off of, but I would say at least in one course, there's at least one company that has been
Out of how many?
out of 8 of 10,
10, okay.
8 to 10, because if we have a group of 40, I had groups of 80 sometimes. Then you got maybe 10 companies, 15 companies, sometimes only 8, 5, so depends on the size. But you have the opportunity as a student to utilize the time to experiment, to understand what it's like to be an entrepreneur, while you don't have the full risk. You're not dependent on the income. Of course, you need to live, but I'm assuming most of you, either your parents are supporting or you got stipendia or something like that. So your cost of living is covered right now. And if it fails, no one's going to look in your CV about a student project that happened to fail. Okay, so it's not, a missing period of time in your CV that, what did you do then those 2 years? Well, tried to be an entrepreneur. And, no, it was unsuccessful. Okay, seems to be negative. We spoke about negative things in our society. Failures, not that much appreciated. So you can fail without it being impactful. Okay, you can also succeed with it being impactful. Okay, so there's kind of a reduction of the negatives while you're a student. You can take a look at that. And also, you have more access now to colleagues, team members that might want to join you than you would when you're on the market. If you want to find someone that has, a specific technical background, you're on the university here, so take a look. Want to find someone that has, a legal background, you're at the university, find someone. If you want to find, so you have actually more access to potential resources than when you're alone on the market afterwards, because then you have to really find people that are probably also trying to earn money, which you don't have. Okay? So it's an environment. That's why we use this as the lab for the entrepreneurs, for you to exercise your skills, get to know what this means. Okay. Business plan, obsolete as soon as they're completed. Business plan will have iterations all the time. Because once you're finished with it, something has changed somewhere. And you need to go through and do the math, the financials again, et cetera, et cetera. They're unreliable as predictors of future. I just spoke. Why is it so important? Okay. You have a number of building blocks. Okay. Elevator pitch. Know what an elevator pitch is? Okay. The expression comes from the opportunity when you get into the elevator and your CEO happens to come in, that you can step in, and while you're going up, you have the 20, 30 seconds time to tell them about your idea. Elevator pitch. Very, very short. What's it about? To someone very high level. Then a chalk talk. Just, okay, what's this about? Well, it's like this, So you present very, very short. And then what we typically do is the PowerPoint. And we have here, it says 10 to 30 minutes. What you need to also have is, you need to have a version for 5 minutes, 10 minutes, 15 minutes, 20 minutes, 30 minutes. Because it's very, if you get a slot with a VC, they're very often very loaded on time, very time constrained. And let's say you have an appointment at 2 p.m., you're there at 2 p.m., it slips, so you're still waiting at 2:15, 2:30, and then the VC comes out of the door and says, oh, I have to catch a flight, I don't really have too much time now. And what you want to do then is what the vacuum cleaner salesmen do. Foot in the door, okay? And what they do then is they throw dirt on your carpet right away. Okay? So that you can clean it, you know. So now, foot in the door means, well, if you give us 10 minutes time, we can tell you about our idea. And if you think it's enticing enough, then we can reschedule sometime. Because if that guy gets in the plane without seeing you, you're not going to probably get a second meeting. Very unlikely. Okay? So foot in the door, I can present in 10 minutes. And you can, it's very difficult to take any presentation that was constructed for 30 minutes down to 10 minutes. Very hard. You miss things. So you have to have one for 5 minutes, 10 minutes, 15 minutes, you know. So you pull that one out, you know, called PowerPoint 10 minutes, and then you present that one. So it gives enough time on the, you know, the major points. It's very crisp. It's a little bit longer than an elevator pitch, but gets to the points. And otherwise, most of the time you're just skipping slides on the 30-minute one, which kills time and it doesn't look very professional. Okay, so in this one, we need multiple versions. Demo is very good if it works. We saw that yesterday. Kills your presentation. Okay. Who saw it yesterday? Okay, so most of you did see it. Okay. So it helps people to understand if it can convey what it's about, and it has to work. Okay. And then the business plan itself, 20, 40 page. And there's a movement right now. I'm still presenting the traditional business plan architecture and how we shorten that even. But there's even now a new movement onto what we call business plan canvases, if you've heard about those. It's kind of like a 1-2 page approach on articulating your business plan. I don't have that in here yet, but there's a great book focused on that from Stephen Blank, just came out May this year. Yes?
I have a question. From your experience with the joint program with UC Berkeley, how do you pedagogically transmit to your students the idea that time is scarce and they have to be very specific and to the point to write on 1 or 2 pages what they have to say or to present it in 30 seconds? I find this to be a very big challenge. So how you transmit this scarcity of time?
Well, we start off by actually doing. So it's learning by doing. So we have the business plans. We have what we call a dehydrated business plan, which is a shorter one anyway. And then we have the students present with video feedback. Okay, so we take the video, and it's on a hard drive. I'm not sure if that one is also a hard drive. You can immediately play it back. You don't have to rewind. And then we play it back, and your critique of yourselves is the most devastating critique that you can ever experience. And so people start to see what they're not doing right. Okay? Getting crisp is something that we do with coaching. Okay, so we don't like to do it in front of the whole group because critique is always kind of personal. Okay, so in the classroom we allow positive critique. So what did you like about this presentation? But we don't allow negative critique. That doesn't make sense. We want, as a group, we want to advance. But sometimes that critique can be, they saw it themselves with the video feedback. You don't have to tell them all of the things that they were doing wrong. They see that pretty quickly. Okay? Okay. When you're looking at financing, you need to have also an understanding for the business plan of how you're going to afterwards sign the deal, okay? Because someone likes your business plan, okay, let's sign a term sheet. So you need to think about most of these things up front so that you know what you're doing when you actually sign. Who owns the leases, you know? Does my friend own that, or does the company own that? Because if my friend leaves the team, then we don't have a place to work. Okay, things like that. Okay. Business plan is important. The process never stops. How you communicate the plan is crucial. That's the elevator pitch, that's the PowerPoint, that's what really counts. We saw the difference between the written business plans that you saw and the pitches, okay, very shortly. And the written one gets you the appointment, the pitch gets you the deal. So they both have to be of perfect quality. So how many were happy with business plans? Have you written business plans before? Anyone? Yeah? 1, 2. Were you happy with it?
Yeah.
Yeah? Just start a business?
Yeah.
You started a business with it?
No, I didn't start.
Then you weren't happy with it.
What?
Then you weren't happy with it.
Yeah, but I want to for the...
So it was an exercise for you?
Yeah.
Okay. Well, the thing that has to happen is the spark from an exercise to a real business. Okay, so what happens then when these student companies become real companies that can support the students is that spark has happened. That it's not an exercise. This is a cool idea, you know? We want to do this. We think we could actually succeed. Unheard of. Okay? So that's what has to happen, that spark. So a business plan, if we go take a look. Okay. So interesting is, even if it's a technology, we're only looking at, from 40 pages, 2 to 3 on the technology. So very typical when techies write business plans, it's usually all about the technology and very little on the market. This is about the company and business. That's the largest piece with 5 pages. Market analysis, customers is even more than the technology. Okay. A little bit on management. So who's the team, etc. Financial studies, etc. Okay, this is kind of the full-blown document that you would submit. Okay, and the process is you write the plan, you test it, you look at the and you basically this circles a couple of times. Who should write it? The CEO must internalize it. When it's a very small team, they're all the CEO, so they're all writing it. Okay, team members must understand their responsibilities, understand the overall plan. This validates the team's ability also to work together. You're molding together as a team. You get input from advisors. Who's the audience? You, your team, your advisors, and then your investors. Okay, so when you're happy with it here, you go to your team. Then you go and get advisors, and you might circle back a couple of times here as you're going. And then when you're really happy with it, then you go to the investors. How do you start? Just start writing. Start with an outline or a guide. We basically focus on the activities that you don't know. That's the hardest thing. But that's what's still missing. It's really easy to sit down and write about the technology if you have that already, or you know the market that you want to go after. But if you're missing how to sell it or you're missing this, you know, those are the hard parts. So if you want to get it complete as soon as possible, then you focus on the missing components. Must be original, present a compelling opportunity, present a dedicated, passionate team. Team is very important for the presentation. This is the trust that we build. Okay? Be coherent, show your work. What's the toughest section to write? It's the summary, executive summary. Some people try to start with the summary, and that's wrong. You have to have the other pieces finished first and then really summarize it. Where's the real work done? Customer development plan. You have a lot of pieces here that to look at. Competitive research, etc. These are all components there. Yes?
I was kind of slow. Like on the previous one, you had that it's important to be original.
Yeah.
But actually, it's happening a lot, like in the region in Eastern Europe. Like they just take, like people just take an existing model that's working in the West, and they're just trying to adapt it and kind of alert it so it would work here.
Well, the format doesn't necessarily need to be original, but the content needs to be original. So, you know, basically taking modules of content of marketing strategies from someone else and kind of plugging it into yours, changing a few words, will be noticed by the VCs, because it's going to be absolutely different all of a sudden, different language, different focus, than different depth than the rest of the pieces. So be original as the content is meant. It actually makes sense sometimes to have the outline kind of uniform for the VCs, because then they know kind of where to look for things. Okay? And that's kind of where this business plan canvas came as well. How do I show this on 1 to 2 sheets, what this company's about? And then you go into detail if you want. Okay? So it helps them understand customers and market and technology quickly. Okay. Okay. So this is from a VC. It's basically, I look for a very clear statement of their long-term mission, the people, the technology, and the fit to the market. Okay. The people is the first thing that stands there. Then the technology, then the market. Okay, it's a technology VC, but people first. That's why we also exercise the business plan presentation that much in the class, because it's about the people. That's what gives you the trust. It would become a standalone document, the executive summary. What you evaluated yesterday were executive summaries. Okay? They had a lot of information, but they were basically executive summaries of because the plan itself were pretty thick on each of those. Spend most time on the product description, competitive advantage, business model and projections, the management team. What about a mission statement? That's more later, okay, when you've built the company. Mission, vision. Corporations have that. Okay, this is how to describe the company. Stage of the business. I'm just moving through some of the parts that you can read later, because not that much. VCs are looking for the market, the team, and the traction in the market. Which market are you in? Then they identify if they are compatible with you as a project. So is it an IT project and they're IT VCs compatible? Okay, then they understand. Then they look at the team. And then the traction. Traction means, have I entered the market and is it starting to move? Is my business starting to move? Okay, traction is like with a car, you have traction on the street. Quickly talk about market, team, and traction. Most people put the team at the end and often never get to it before the VC has to leave. Actually, in the corporate environment, we have, I've seen very often presentations to senior management. They were trying to tell the management what this is all about, et cetera, and then at the very end, they're asking for the people and the money to do it. And very often they don't get that far because other questions come up, et cetera, et cetera. So what you typically need to do, and this is in a corporate environment, but the VCs are looking kind of like for the same thing to understand. Corporate environment, you have a meeting where you basically have a couple of VPs there, and you want them to sign off the headcount and the budget. You tell them that right up front. I'm here to pitch this project. I need you by the end of this hour to decide on 20 heads, $2 million in spending, and whatever. Okay, so the management team immediately notice what they're expected to decide on, the size of it, and so they're also more attentive than later when they're looking at it to find the arguments to approve it or disapprove it or ask questions about it. But at least they know why they're there and what they're requested to do. Pitch details. Wear your uniforms. That means dress nicely. Okay. Business cards. The ink shouldn't smudge when it gets a little bit wet from the fingers. So it should be more professional business cards, not printed on a line printer, laser jet. That's a sign of respect. Unless you're the uber geek CTO, you won't get away with. You need to. Now, when we had the .com era, I hired an engineer. And when that engineer came to interview, piercings, okay? Leather jacket, shirt outside, army boots without laces. But it was the perfect technical person that we were looking for. And besides that, he looked like our clientele, because in the .com era, they were running around like that. So we wanted to hire him for that function, because he would be talking to the CTOs of the .com companies. You couldn't imagine what type of pushback I was getting from our human resources department. Because they were saying, you can't let someone like that walk through the aisles of the company. I said, why not? You have corporations that, kind of develop an image, and you have some restrictions, some pushback sometimes. But we hired him, great engineer, stayed on for a number of years, and then became an entrepreneur. But was interesting. It was a pushback from our human resource department just because of his looks. Okay. Be on time. VCs have a busy schedule. Know how much time you have, plan accordingly. We spoke about that. Bring key members. Okay. So if your team is, maybe 8 people, you don't need to bring all 8 to the meeting, but you should have the CEO, the CTO, and maybe someone from the finance or the marketing person, so they can articulate that piece. So a team size would be maybe 3, and you can introduce the others on the slides, but that's kind of what you would typically see. Okay. Have multiple people talk. Okay. So the CEO would hand over to the CTO to talk about the technology, over to the marketing person to talk about the marketing concept, so that the VCs can see the team and develop that trust. Because in the end, they're saying, okay, here's the money, and I believe that you can actually pull it off. You can actually do it. Stand up when you're talking, practice, know your story. Make sure your stories match. I've had student teams where the CEO was telling something and was saying, okay, we have 40 gigabyte of throughput, and kept on talking, and over here was the CTO, and when he said that, the CTO I mean, you were the audience, you were the VC. Did you see that? Yes, of course you saw that. So something's not in sync here, and you see that, okay? So later on, I mean, you just, listen to it, and later on, you talk about it, and then you correct it. Yeah, we have 20 gigabytes of throughput. They probably won't even notice that the CEO said 40, and I'm saying 20. And if they do, they ask and said, "Oh, it's actually 20. Maybe it was a misstatement earlier or something." They probably won't even notice though, because they won't listen to those details that closely. But your stories should match. Show enthusiasm. Okay. We'll talk a little bit later, but if you're talking about, I want $5 million because we have such a nice project. If we only had the money to do it, it would be really nice. That doesn't really sell well, does it? We need $5 million. We have a project, it's just beautiful, and you can get rich with us. Just put your money on the table and we'll multiply it by 10 in 5 years. Enthusiasm. That's where they start to believe that these people are going to swim through, whatever turmoil comes at them. Because they see the passion. Passion can move mountains. Okay, so we put together, this actually came from Stephen Blank, out of one of his lecture classes. And we asked if we could steal it, and he said yes. So it's basically the whole pitch here, the elevator pitch, you can put down with a very short skeleton like this. So for a customer, who, the need, the product, etc. So for a database customer who needs 40 gigabytes throughput, the new product is a perfect solution for his needs that not only does 40 gigabytes, but it can also store and manage data on its own, unlike the company over there. Our product does this all with ease at half the price. Okay? So if you fill in the blanks with your product, you can do that easily. You have your elevator pitch just like that. Okay? What should I care? Guides are great. Your plan must be your own work. Writing the plan is a process of convergence. Okay. So Intel has a business plan, business plan competition, depending on how this course comes together. Junior Achievement, for example, is one of the submission instruments here. So the partners that we're talking about here, qualified partners, they get about 70% of the slots. And then there's some that we allow to kind of shortcut. Sometimes when new regions come up that are starting, then we don't have a partner yet, and we still kind of let them come in. Okay? And about 30 teams at the Berkeley and 8 teams in the final. 3 teams win. Typically a first and a second, and then a people's prize. So the audience gets to put a prize.
And were there Bulgarian teams represented in that?
Yes, and there's going to be now another one, Imaga, in November.
So is Imaga among the 30 teams?
Yeah. Yeah.
So they will be competing for the 8th spot.
Yeah. And that happens, these teams compete on one day, but not all against each other. So it's split out kind of into like 5 teams for different VCs. And then those VCs sit together and then they decide on a ranking list. Even though they didn't see all of the plans, they are basically advocating for their best ones, okay? And then from what they're hearing, they will say, okay, no, I think yours is better than mine. So, you know, so like that.
Okay, and do people get money on the side? I mean, if somebody likes a plan that others don't.
That happens, yeah. And very often when the teams go over, some of them establish themselves in Silicon Valley when they get that far. You know, create an office there. Because they get the travel paid and whatever paid as well. Okay. Presenting for success. Actually, this is, I spoke a little bit about these as well. So, why are so many presentations unsuccessful? We underestimate the audience, too much detail, no clear message, no clear intent, foils too cluttered, presentation not structured, not enough presenter power. Weak presentation skills, content and time slots not in sync, so too much content to the time slot. Hostility in the room, that's more in a corporate environment. When you're pitching for the funds, corporates are also limited. They don't have all the funds. So your neighboring department is also pitching for those funds. And they know you very well, so they can probably, you know, yeah. You know that won't work. You know, they can make your life hard during your pitch, okay? So you do that outside of the room. You figure out, okay, we're going to be in competition for this budget, and you find a gentleman's agreement on how to do that. You know, either, you know, the rules, or you try to figure out, okay, maybe my project is better than yours, or his is better than mine, or something like that. So, so I sorted those and then addressed those in different areas, okay? Too much detail, probably number one issue. We try to bring the audience up to our understanding within the presentation. That was harmonics. He was talking like 100 miles an hour just to get, you know, the information over. Too much information. Okay? VCs get the gist of something quickly. You don't have to give them all of the information in the presentation. They have the paperwork. They have that up front in advance. So focus on the summary. Focus on the extract. Okay? No clear intent. You don't even know why they're talking, you know. So have a presentation about something, and the why comes at the end, and you don't get to that. The structure, foils too cluttered, 42 bullets on one page. I had a colleague that had that, 42 bullets, you know, and you know, we had an auditorium like that, and I got up from back there and went up and stood up here to try to read the bullets, because you couldn't see it, you couldn't read it, and that was kind of to demonstrate just that it didn't work. Okay. Are people reading rather than listening? Now I'll get to that in a second as well. I use builds, as you've seen, and I talk as the build kind of comes up, like in the diagram. You know, you can use that. You don't have the whole picture yet, because if you put everything down there, you know, what do? You're reading, right? okay? You're reading. And that's not good either. Now, that has a caveat, and I'll talk about that in a second. Presentations are not structured like a research, they're structured like a research document, so everybody falls asleep immediately. Recommendation about 60% content and leave about 40% for Q&A at the end. That gives your VCs, your counterparts, the opportunity to really ask more in-depth questions and be prepared to be able to pull up some extra slides that cover some of those pieces that you anticipate they might be asking about. Okay, hostility, I spoke about that. Okay, so a structure we can have here: intent, the vision, status, issues. Then we had this one for the elevator pitch, an example, very short type of, and this is, kind of. So our vision is to create a machine that can convert CO2 into its components C and O2 at a huge industrial level while binding C into other compounds and releasing O2 back into the atmosphere. Cool, huh? Would be cool. The opportunity at hand is to create this fabulous machine which will have worldwide positive impact and demand while making a significant profit. Well, it's profitable too. Our objectives are to create a prototype by so-and-so, acquire a patent, prove that this prototype, that the vision is viable and can be done at a huge industrial level. Achieve next level VC funding of so-and-so $1 million. Get an order for 10 such oxygen plants. Do an IPO. Kind of a rundown of what we're planning. Our status is to create the prototype. We have designed the product and purchased the bill of materials, so we have everything ready, et cetera, et cetera. The issues are, it's good if you have issues to tell them also, because maybe they can help. Maybe they want to help. The prototype will have only 80% of calculated efficiency. This can be solved, but needs a redesign of component XYZ, etc. Recommendations are to receive to finalize prototype and file for patent, hire so-and-so people, etc. And then Q&A. So kind of a rundown of a short business plan. I think, most of you got the idea, okay? Whether it's technical viable or not, I don't know. I think it would be a cool machine, but you've got it relatively quick in a format like that. And you've got 30 minutes normally, so you can go into detail in a couple of those areas, okay? Okay. Communication channels. What do you think this is about? Talking.
What are the channels through which you promote your idea? So like the presentations?
No, he was closer. We're talking about communication channels. The first channel we have is our presentation. Okay? There's information on that. It's a communication. I see it. Then we have our voice. It could be like this, and I can talk to you very softly. And then the room gets very quiet because they want to hear in the back. But you can also use it louder, and you can use it for different usages. You can talk normal sometimes, and you get it very forceful here. Okay? Scare the wits out of her. Okay? Use channel of your eyes. What most of you should have noticed over the last couple of days is that I try to attach with almost everyone in the room with the eye contact and try to see where they're at. Are they following me? Are they falling asleep? You know? Are, you know, you get input. Not only that, but because of the eye contact, you connect closer to the audience. So while we're talking over here and I have eye contact with you, just with you, they're waiting over there for me to turn and look at them. And I can use this as a powerful weapon to the audience because they want attention and they're not getting it. I'm only giving you attention and no one else. And everybody else over there is waiting for me. You know, the pressure's going up. It's starting to boil, you know. And then I move over here and I contact, yeah. But did you feel a little bit of that? Of course I exaggerated, but it's a weapon, you know. You've got that eye contact. And if you don't go over there, now he's boiling here pretty soon, you know. So you can use that while you're presenting. I actually have an anecdote here from Bulgaria, okay? I was presenting and it was the day of the entrepreneur, an EU event, and it was done around all of Europe. Every country got some funding for that, the day of the entrepreneur. I was presenting there and I would go through the audience and there was a gentleman there, would nod, okay, you know, so and then I'd, you know, come back and then I'd have the eye contact with that gentleman and he would, and then I would go back, you know, and then come and that gentleman would nod, you know, and then I'd go back and, okay, and then it would nod. And I was confused to heck. And I thought, something, you know, he seemed to agree on this and disagree on that. And so afterwards we had bistro tables and finger food. And so I kind of saw he was over there, and when discussions on my table ended and discussions on the other table ended, I kind of went over and I said, yeah, how did you like the presentation? And he said, oh, it was good, great. You know, I said, well, you know, I saw you sometimes, you know, approving, nodding, and sometimes I saw you disapproving. I said, well, that's easy to explain. In Bulgaria, this means yes, right? And his mother is Turkish, so this means yes too. I said, you confused me completely. Okay. I guess you have also many other nuances of something like that or something like that. I won't go into that. Okay. So, eyes. Eyes channel. Input channel. Okay. And I can also execute some control. Okay. Ears. Input channel mainly. Okay. You notice if the audience is restless or something like that, you can utilize, you hear back. Of course it's a channel. The left hand, why do I talk about the left hand and the right hand? I have a mic here for the video. Very often, you know, you're tied to a pult with a gooseneck microphone, and you're tied there, which is not good because you sometimes like to move and whatever. And so they give you then a microphone. And then I have a clicker. Okay? So what just happened to my two channels? They're limited. Okay? Because I have the microphone, this one, I can't do something. So when I say this is a global business, that has some impact, I could raise my voice. But if I didn't have these and I went, this is a global business, more information comes across. I make myself bigger. I'm using this. Okay, it's only a couple of centimeters, but global business. You're talking, you're using, you have gestures. This is all underscoring. You know, you can use your hands to communicate. When I grew up in the US, they said, present with your hands behind your back.
You're right.
2 channels went away. Okay? In Europe, for a while, when I moved to Europe, was also not too much. They basically said the Italians speak with their hands. But now most of the cultures are using gestures while they're presenting, talking about things. Okay? So, channels, communication channels. These are things that help you in your... Now, if you have a mic like this, and not one like this, you're gifted, because you at least have the left hand. If you have a pointer and you don't need it all the time, put it down, because it frees up another channel. Okay? So, you remember when we didn't have pointers, we had these telescope things. What did people do? They would play with the telescope. And so, you know, the eyes look for motion. Okay? So you look and look at the motion, right? So, I'm not sure if it works with this, but, you know, if I'm sitting there with a microphone, you know, where are you looking? You know? I'm distracting, you know. So these are all things that distract and don't allow you to use the gestures you can use. And we have our whole body that we can use. Okay? So when I moved forwards and scared the heck out of this lady, I went, you know, I'll use the body. And I got into her personal area here. I moved. I had the hands and my voice was loud. Not intentional or not negative, but it shows the effect. Okay? You can use your body, you use your gestures to communicate. When you get all of these channels communicating in symphony, then you can get much more across to the VCs in those 30 minutes that you have that can help that trust to be built. It's not about that. It's not just about that. It's about the whole person. It's about the whole, do I feel comfortable? Does that person, is it communicating? Does that person have passion? You know, all of that. In some of the course when we do, I usually book like the Audi Max, the biggest auditorium, 500 people. No microphone. And then I have them present, the students present a hobby, 5 minutes. But I'm standing at the top and I want them to speak up. Speak loud enough so they don't need a microphone. Everyone can fill a 500-person room with their voice. They might not be used to it, and that's why it needs to be exercised. Because when you start speaking louder, the pitch usually goes up a little bit, and you feel funny. It feels like it's not, you know, you're not comfortable with it. Well, I'm going to, you know, so it kind of goes up automatically because you're putting pressure behind it. But you can do it. Everyone could do it. It feels awkward. Just like presenting and getting video feedback the first time feels awkward. But they're very good tools to learn. So, let's review the channels. So we have presentation as an output channel, voice is an output channel, eyes are both. Spoke about that, ears and input, left hand, right hand, body, output channels. So we have a whole symphony to play when we go. to a VC or present at all. I focus a lot usually on this presentation skills in the classroom, also with executing and with the teams, because you will be presenting and selling your capabilities for the rest of your lives. Okay? You should probably learn it. Exercise it. Become great at it. It will help you succeed. We already looked at those. Finished.
Let's give an opportunity to have a couple of questions, and if nobody has something to ask, let's say goodbye. Yeah, go ahead.
I have just a general question. Can we get this presentation?
Yes.
Sure.
Yeah, I'm getting it from Professor Harris, and then I have to compile a distribution list out of your sign-in sheet information, and then you will get the materials.
Oh, okay.
Okay, so in case you haven't signed in the sheet today, you should do this.
If you signed in, you get it. If you didn't, or if it's illegible, you don't get it either.
Exactly. So the right incentives are in place. Other questions? I have a practical question, and I'll ask it because I have some experience with not these particular students, but other AUBG students. And my experience is that they all feel that they know all this, the thing that you presented, that they have to be able to communicate, and they kind of intuitively identify with the information. Now, if you ask any one of them to come there and show how he or she performs, then there is a very different story about their skill set.
Yeah.
And then you said it can be learned. What's the time span? What's the time that should be given so that they get this self-consciousness about the channels of communication?
About consciously utilizing, that is something that you only get when you present time and time and time again.
Right.
Okay, so I wouldn't say I'm a perfect presenter either. There's always things that you notice while you're presenting. Oh, I forgot that. You know it, but I forgot it. I didn't use it. I used these last 3 days. I used the pointer too often. In the hand too often, okay? So you know the things, you know the theory, but executing it in the praxis all the time is hard. Has to try to move. The gestures kind of came. I think I'm using gestures a lot, but you had, because I grew up like this, you have to use them, and you have to feel comfortable with it. If you're presenting and then you have the video feedback, that will help you understand what you're doing and what you're not doing. And we did that not just once, we did that every time they presented their plans again and again and again. They would get a DVD then of their team's performance, and then they could look at it and analyze it each for themselves. And then, it grows from there. It's exercise. Then feeling comfortable of doing that in front of 500 people. Am I going to make a fool of myself? Your heart rate goes up, whatever. So what? Make a fool of myself. Had a good time doing it. Okay, so it's exercise, but for the rest of your lives, you're going to be presenting. You're going to be selling. Oh, I don't want to sell. I'm not a salesman. Well, you're going to be selling your ideas. So it's a means to get it approved, to learn how to sell that. You're selling yourself when you go to an interview somewhere. How does the HR or the HR person or the manager get a feel for you. You might not be standing up, you might not be presenting something, but you are presenting yourself, your self-confidence, your passion. You're using a subset of those channels, but you can use them intentionally. So, especially with the techie people, they usually, sales, oh, that's the dark side, you know, don't want to go there. But once you've started to sell your competency as a product engineer or something to the customer doesn't always buy just the product. It's buying the companies, just like a VC, buying the competency that this guy knows what he's talking about. That's probably a good product. And if not, then I got this guy that can help me. You know, it's kind of a trust that builds us as well. So, you know, this is a skill. It can be learned, needs to be exercised. I mean, it's like, anybody play a violin? No? Piano? Okay. How did that sound the first couple of days? Terrible? Huh? That's what it's like. I mean, it's learning a skill. Now you want to play, you're learning skill with different things. You're learning, you know, this hand, what can I do here? This hand, what can I do with my body? You know, does it distracting? There's the movement there. Sometimes you know, you can utilize this to explain, you can use the pointer. If you use it intentionally to underscore things, then that helps understand. We had a professor that at that time we didn't have wireless microphones. We had a microphone with a long cable. And the professor had the nickname the Tiger. Because the professor would talk and would walk back like this, and then he'd toss the cable over at the table, and then would talk over here, and then get over here, and then go back, and kept on explaining, and then would toss the cable over the table. You know, it looked like a tiger going back and forth in its cage. That wasn't intentional, but I still remember it. Okay.
So I think that's the time
we overran a little bit.
Yeah, but that's the time where we say farewell and we wish each other a lot of success and a lot of improvement in our presentation skills, and hope that many of the people that you see here, you will be seeing in a video that we might email to you with their final presentation for the entrepreneurship course this year, so that you can actually see how well they perform.
I'll be seeing them showing their passion, you know, and getting the audience engaged and letting them boil over there and this.
Okay, guys, thanks a lot for showing passion and enthusiasm. Thanks, Mark, for being here and for supporting our effort to build a community with enthusiasm and drive towards entrepreneurship. Thanks a lot.
You're welcome.
This program is brought to you by AUBGTalks. For more, please visit us at aubg.bg/talks.